Happy Monday, everybody. Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's #2 economy. My name is Tony. Let's jump in. Just a quick piece of housekeeping before we move into the main developments. This is my last day in Sydney. I'm still filming from my hotel, as you can see. I fly back to New Zealand tomorrow, and because I will be travelling for all of tomorrow, there is a possibility that there may not be a video on Tuesday. I will try to get one up, but there may not be one up on Tuesday, but we'll be back to regular episodes from Wednesday. First up, the US-China trade war 2.0 has begun, as US President Donald Trump announced sweeping tariffs on imports from China. This latest round of economic confrontation threatens to upend global trade and further strain diplomatic relations between the world's largest economies. On Saturday, Trump issued an executive order imposing a 10% tariff on all Chinese imports, alongside 25% duties on goods from Canada and Mexico. The decision, justified by President Trump as a response to the influx of illegal immigrants and fentanyl-related drug issues, marks a return to his aggressive trade policies from his first term in office. Trump's executive order called on the Chinese Communist Party to leverage, quote, the most sophisticated domestic surveillance network, end quote, in the world to stop criminal organizations facilitating the flow of illicit drugs. The White House emphasized that the tariffs were implemented under the International Emergency Economic Powers Act, an authority rarely used for trade measures. The administration also included a clause stating that any retaliatory action from affected nations would be met with further increases in tariffs. Beijing strongly condemned the new duties, calling them unjustified and politically motivated. China's foreign ministry accused the US of using fentanyl as a pretext to implement protectionist measures. The Ministry of Commerce announced that China would take, quote, necessary countermeasures, end quote, and file a formal complaint with the World Trade Organization, WTO. While China has yet to specify its full retaliation strategy, economists suggest that Beijing could impose its own tariffs on key US exports, restrict access to its domestic market, or introduce new regulatory measures affecting American firms operating in China. The possibility of further export controls on critical minerals, essential for global supply chains, has also been floated as a potential countermeasure. However, Beijing will be somewhat hesitant, as it is very vulnerable, being so reliant on the US market for its exports, the only bright spot of its economy, and of course the administration can increase the tariffs from 10%. The announcement has already sent ripples through global financial markets. Chinese equities listed in Hong Kong tanked after the news, with the Hang Seng China Enterprises Index declining by 2.5% before stabilizing. The Chinese currency, the yuan, also weakened against the US dollar, approaching a record low. The yuan breached the psychological milestone of 7.3 per dollar for the first time since late 2023 last month, in a sign the government is potentially willing to let the currency devalue to benefit exports, even after the central bank spent months defending it. Most of the increase from tariffs can be absorbed through exchange rates. Josh Limpsky, Senior Director of the Geoeconomic Center at the Atlantic Council, expressed on Sunday, explaining, quote, that's one reason why Beijing's rhetoric will be sharp, but its economic retaliation will potentially be more muted, end quote. Analysts at UBS and Goldman Sachs predict that these tariffs, these 10% duties, could impact China's GDP growth by 0.3 to 0.9%, depending on the extent of China's countermeasures. The additional levies could especially hurt industries like home appliances and lithium batteries, sectors heavily reliant on exports to the US. Indeed, as we have seen, if tariffs rise to levels Trump promised during his campaign, approximately 60%, then China could see over half of its growth hit. Unlike the previous trade war, where China was Trump's primary target, this round of tariffs extends to key US allies, potentially reshaping global alliances. With Trump also hinting at possible tariffs on European Union imports, international trade dynamics are becoming increasingly uncertain. China, meanwhile, may find an opportunity to strengthen economic ties with Europe and other nations facing trade barriers with the US. However, because China has so alienated some of these countries in the political realm, especially, for example, in Europe with its support of the Russian invasion of Ukraine, even if there is opportunity in the economic sector, they may not be able to take advantage of it. Some analysts believe Beijing will seek to present itself as a more reliable trading partner, potentially positioning itself as a leader in global trade negotiations. The jury is still very much out, however, whether it can pull this off. we will need to see. Trump's latest trade policy signals a willingness to leverage tariffs as a geopolitical tool, linking economic measures to broader security and drug policy. Beijing should be no stranger to this. We have seen Beijing in the past use its own market access as a political tool in international affairs, perhaps most infamously by leveraging tariffs on Australia after it called for an inquiry into the origins of the COVID-19 pandemic. Trump's administration claims that the tariffs will remain in place until the flow of fentanyl into the US is curbed. However, critics argue that the measures could drive up costs for American consumers and businesses while failing to address the root causes of the drug trafficking. However, the administration may simply be using this as a starting point for potential escalations with further tariffs in the future. With China expected to take a measured but firm approach in its response, experts predict a drawn-out period of economic tit-for-tat that could disrupt global trade flows. However, China is much more reliant on trade and therefore vulnerable to a drawn-out trade war. As the situation unfolds, markets, industries, and governments worldwide will be closely watching how the world's two largest economies navigate this intensifying trade dispute. Next up, we have more on the Chinese economy, but first, this month's first sponsored feature. Sponsored features are limited to just 1 or 2 a month. This is to ensure that the channel is financially sustainable while also primarily subscriber supported. I pick these sponsors very carefully myself, and if you would like to know how I choose to work with sponsors, this is in the description below. We are living in a time of great change, but in times like these comes great opportunities. On January 20th, US President Donald Trump signed an executive order called Unleashing Alaska's Extraordinary Resource Potential. The executive order directs US policy to fully avail itself of Alaska's vast lands and resources for the benefit of the nation. While specific policies and initiatives on mining have not yet been announced, this is a very positive indication of the federal policy-making mindset at the presidential level. And today's video sponsor owes a significant estimated mineral resource of gold and copper in Alaska. This presents a rare opportunity, and that is exactly why US Gold Mining Inc., trading on the NASDAQ with the ticker symbol USGO, could be a top pick going into 2025. US Gold Mining Inc. has no debt, approximately $4.4 million in cash and cash equivalents as at September 30th, 2024, and a flagship asset, the Whistler Project in the great state of Alaska, where the governor, Mr. Mike Dunleavy, a friend of US President Donald Trump, is working on a massive roads and infrastructure project to make mining camp sites more accessible. At its April 2023 IPO, gold was worth $1,930 an ounce. Now it is trading at an all-time high. Their flagship Whistler Gold, Copper, Silver project includes 3 gold deposits with combined estimated mineral resources of 6.5 million ounces of gold equivalent in the indicated category, plus an additional 4.2 million gold equivalent ounces in the inferred category. Here is Mike Dunleavy visiting with Tom Smith, the CEO of US Gold Mining at the Whistler Project. Before Tim Smith on the left was CEO of US Gold Mining, he worked for Newmont, the world's largest gold producer, a multi-billion-dollar company. Before that, he was instrumental in selling a gold project not too different from Whistler to Goldcorp for 520 million Canadian dollars. That project was smaller than Whistler, which is currently valued at only $65 million, and the price of gold was $1,300 back then. Today, it's double. He's certainly the right man for the job. So we have a company with the right project in the right region at the right time, all while gold hits all-time highs, and this company is trading at lows. This is a speculative opportunity, risk but also potential upside, and as such, US gold mining is worth looking into and doing due diligence on. We remember that all investment involves risk. This sponsored feature is not individual investment advice. Always speak to a professional and do your own due diligence before making any investment decision. A big thank you to US Gold Mining Inc. for sponsoring this episode of China Update. We now return to regular China Update coverage. China's manufacturing sector saw an unexpected decline for a second consecutive month in January of this year, highlighting the urgency for Beijing to implement stronger economic stimulus measures. The Caixin China General Manufacturing Purchasing Managers Index (PMI), an unofficial but authoritative measure of the economy, fell to 50.1, a 4-month low from 50.5 in December, falling short of economists' expectations of 50.6. The decline is attributed to a sharp drop in employment, weak external demand, and falling prices. Wang Zhe, a senior economist at Caixin Inside Group, noted that international policy uncertainties, including newly imposed tariffs by US President Donald Trump, could further challenge China's export sector. Trump's recent 10% tariff on Chinese exports threatens to weigh heavily on the country's economic momentum. The official manufacturing PMI, released earlier, also showed significant contraction, marking the weakest activity since August. The findings reinforce the urgency for Beijing to inject more fiscal support through public borrowing and spending to boost demand. Manufacturers reduced output prices for the second straight month, marking the sharpest drop since July 2023, as they sought to drive sales. Bloomberg economists noted that Trump's tariffs could intensify downward pressure on China's economy, prompting policymakers to increase stimulus efforts and possibly devalue the yuan. An early Lunar New Year, which prompted factory shutdowns and worker migration, also contributed to the economic slowdown. The divergence between Caixin and the official PMI surveys continues, with the former focusing more on small and export-driven enterprises. And finally for today, China should take a, quote, leading role, end quote, in counter-terrorism efforts with Pakistan to protect Chinese personnel and infrastructure investments, particularly in Balochistan province, according to a recent think tank report. Feng Zhizhong, a researcher at the Security Studies Center of the People's Public Security University of China, emphasized the need for enhanced intelligence sharing and greater involvement of Chinese private security firms. China has invested extensively in Pakistan as part of the Belt and Road Initiative, yet Chinese citizens and projects have been targeted by terrorist groups, especially in Balochistan. The separatist Balochistan Liberation Army, BLA, responsible for many of these attacks, accuses China of exploiting local resources and bolstering Islamabad's authority. China has also been accused of neo-imperialist meddling in the country's affairs. In the Chinese report, Feng stated, quote, "In the face of the increasingly rampant terrorist activities of the BLA, China should change its mindset and should even gradually play a leading role in countering terrorism," end quote. This is essentially stressing that China should be the primary security guarantor in the country, something that may cause some disquietude in Pakistan itself. Feng highlighted that China's counter-terrorism capacity building in Pakistan is lagging. Quote, "Cooperation between China and Pakistan in the areas of extradition treaties, intelligence sharing, and mutual legal assistance is not sufficiently advanced. And mutual legal assistance in criminal matters rarely involves the exchange of information on terrorists or their extradition," end quote, the report noted. Feng also proposed an expanded role for private security firms, suggesting the establishment of market-oriented Chinese-Pakistani joint security forces. However, despite Beijing's push for a larger security presence, Islamabad, to no surprise, has shown reluctance to adopt these measures. Indeed, this would likely be seen as a challenge to its sovereignty. During Chinese Premier Li Qiang's visit to Pakistan last October, shortly after an attack that killed 2 Chinese citizens, no significant progress was made on security discussions. While China has pledged to support Pakistan's security efforts, specific details remain unclear. Feng suggested that external actors, including India and the United States, might be supporting the BLA to weaken Beijing-Islamabad ties and hinder the China-Pakistan economic corridor. All of this also symbolizes the difficulties on the security front when it comes to China's Belt and Road Initiative and its years-long program of investing heavily in some of these traditionally more unstable regions. It also shows a process which has a long history, where a powerful nation invests in regions and then in the security arena gets pulled in. Now, despite these security concerns, Feng advocated continued Chinese investment in Pakistan, arguing that economic growth and improved living conditions could help mitigate terrorism in the region. The CPAC, a key Belt and Road project, has seen China invest approximately $65 billion in mega projects, particularly in the south, aiming to transform Gwadar into a crucial international hub. giving China greater access to the Indian Ocean and beyond. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Have a good Monday, have a productive week, and I will either see you tomorrow or on Wednesday.